Good evening, ladies and gentlemen, and welcome along to this IC Markets webinar, Golden Opportunities Arising in the Commodities Market. My name is Chloe, I'm with Trade with Precision, and welcome along everyone. I'd just like to ask you if you could just pop in the questions box that you can see my screen okay and that you can hear me clearly. That would be fantastic to get that feedback. And then we will get started just by giving you an opportunity to have a quick look through this risk disclaimer slide. So have a quick look through this, make sure you agree with everything therein, and then we can get started with the webinar. Brilliant, thanks for the feedback, everyone. While you're reading that, I guess a little bit of background information about myself. I've been a trader for 12 years. I'm a trader based in London. And I trade predominantly using technical analysis, and predominantly I'm a trend or momentum based trader. That is the same as the majority of traders, I think, with Trade with Precision. So that should be probably enough time to have read through that slide. So without further ado, let's get started with the agenda for today. We're going to be doing a market analysis of the commodities market. And we're going to have a look at any potential trades that may be arising and talk about some future potential movements in the commodities market as well. So I am going to take this opportunity then to go over to the IC Markets web-based platform. So bear with me while I just get that up for you. Okay. So the first commodity that I want to look at and talk about is gold. Gold is one of the most popular markets to trade, for good reason. It does tend to trend nicely. When it does trend, we can see here all of this beautiful trend from you know, before the market started really coming down. So this is up here, this is 2011, 2012. Let's just get the crosshair up there. So this is 2011 up here, but what was until fairly recently the all-time high on gold. And we can see that prior to that, there was a really nice looking trend. Now, when I talk about nice looking trend, what I'm talking about really, and what I'm looking for in my trend trading, is I'm looking to first and foremost identify highs and lows in price action. Once I can identify the highs and lows in price action, I can see whether those are getting successively higher, so higher highs and higher lows as we see here. That's how I identify my uptrend, or conversely lower highs, lower lows for the downtrend. So we can see here that once price started trending on gold, it really did trend for quite some time very nicely, and that has happened in history as well. So moving on past kind of 2012 into 2013, price actually trended downwards reasonably well until getting to this area here where it was just very rangy. And then at this point here, so this was 2018, these lows started trending upwards quite nicely again all the way through to 2020, where we had the start of the coronavirus pandemic, and that saw a huge rise in the price of gold up to these peaks that we see here. Now, what has happened since then, since that high there, and what I want to do is just take you to the monthly time frame, just to show you where I've got these levels from. So in terms of looking out for potential trading opportunities in gold, it's very important for me to have my horizontal levels of support and resistance. So where these have come from, this was the previous all-time high over here, around 1918. dollars per ounce. There was a level of resistance over here around the 1,800 mark, and a level of support down here around the 1,530 mark down there. So those are three very, very important monthly levels. Now, you can actually see how price has recently, even though those levels are from back in 2011, 2012, price has actually recently, once it reached up to those levels, it has reacted very strongly to those levels. So going now to the weekly time frame, we can see a little bit more about what's happening with price right now. So yes, we've had price come up. It's tested the 2000 level. In fact, it's breached the 2000 level, come up a little bit higher even. But it has not managed to properly break that level. It's made it up to 2050. It's not managed to properly stay up above that level. And price since then has been pretty much ranging. So we hit above 2000 over here. This was August 2020. So we hit 2000 in August 2020. We hit it again this year in March of this year. But in between that time, price pretty much has been ranging between not only the monthly levels of resistance that I pointed out just before, but we've also got some weekly levels of support and resistance that are very key as well. Now, what's happening right now is price has actually just broken down below this 1,750 level. And that means that I'm currently pretty bearish on gold. Now, there are a couple of levels of support just down here. So around 1,700, that's a key level of support, not only technically, but in terms of levels that traders look at round number psychological levels. It could be key there as well. And then there's this kind of band of support around the 1675, between 1675 and 1700. So that is the next kind of barrier to price to stop it from really going into free fall. But in between where price currently is and those levels, there's not much standing in the way. So in terms of looking out for trading opportunities, going to the daily time frame here, I can see that what I was talking about earlier about those lower highs and lower lows, or higher highs and higher lows. In this case, I do have lower highs and lower lows. So I've got a downtrend here. The other thing that I'm looking at is the moving averages that I've got on the chart here. I've got the 10 moving average, the 20 moving average, and the 50 moving average. And those are pointing downwards in the direction of that downtrend. They're starting to fan out, and that lends support to the downtrend, or it is in agreement with the price action downtrend. In addition to that, the momentum indicators that I have on here, the MACD and the RSI distinctly bearish. So we're seeing bearish convergence. MACD not so much, has been pretty flat lately, but it is starting to really build momentum to the downside there. So the MACD also agreeing with a potential continuation, certainly lending its bias to the downside. Excuse me, for some reason I've got a bit of a croaky voice this evening, apologies. So in terms of looking for opportunities on gold, I'm looking for short opportunities. Now, it's not going to be right now, certainly not on the daily time frame, because what I would be looking for on the daily time frame is I would be looking for a pullback. Price is well overextended from these moving averages, which I see as an equilibrium point. So on the daily time frame, it really depends what happens next as to where I will be looking for price to pull back to. If price starts to pull back right now, then I'll be looking around about this 1,800 level, perhaps a little bit lower. There's also some support around here, around 1,780. So I'll be looking around there as well. But certainly price to pull back into the area in or around the 10 and 20 moving averages there. If that coincides with that 1,800 level at the time, then perfect. If not, I will be just looking for price action to indicate that that pullback is over before starting again. So by which I mean some kind of bearish candle, whether that's a bearish engulfing or a shooting star type pattern, in order to help me to potentially get into a trade, or at least to know that the pullback has finished and we're looking for another move to the downside. Now, if that pullback up here doesn't happen, bearing in mind that price has actually just in fact today broken down below that 1,750 level, it could be that price now isn't going to pull back all the way up here. If price carries on a little bit further downwards, then my pullback I'll actually be looking around this 1,750 level. The alternative, of course, instead of looking for an entry on the daily time frame, would be to go down to a lower time frame. When I'm going down to a lower time frame, I always want to be trading now. Obviously, I'm telling you my personal preference. It really depends on what strategy you're using, what time frames you prefer to trade. My personal preference is to trade in the direction of the daily trend. The daily trend is short, so I'll be looking on the lower time frames for a short opportunity. So looking at the 1 hour time frame here, for example, I can see that the trend is down. I can see lower highs, lower lows. My moving averages are pointing downwards and agreeing with this trend. Now, it looks to me like potentially there could be a little bit more of a pullback to happen. It would be great, in my opinion, for price to reach this 1,750 level and bounce from there before returning to the downtrend. Let me just have a look at the 4 hour time frame. That could the 4 hour time frame could also yield an opportunity. I'm basically looking for price to return into this area between the 10 and 20 moving averages, and for that to hopefully coincide with one of these horizontal levels. If price continues down from here, then my aim will simply be to wait for the extension leg to finish, wait for a pullback and try and get in each time. So it is actually possible to build positions. There's no need to really take high risk on any one position, because as I mentioned before, once commodities start trending, they can tend to trend, quite nicely for a period of time, and it can be possible to build positions on the daily time frame and on the lower time frames. So perhaps we might be looking at getting into each trade at let's say 1% risk, but by the time we have scaled into the positions, we could be holding a much larger position while keeping the risk down by trailing the stop down past the swings, or by taking profits along the way. But in terms of a target, or where I am looking for price to head down towards now, it's this area around 1,700, which on a daily time frame isn't a huge target. But again, if I were to be able to find an entry on an hourly time frame, it's quite a significant distance for price to run, and potentially quite a high reward to risk opportunity. Now, what might happen once price reaches, or if price reaches down to this 1,700 level, or the 1,1675, is that price could actually bounce here, because we have seen basically over the last couple of years, really prices just ranged between these very highs above 2000, but mainly range between this 1900 level and down here at 1675. Price hasn't really been outside here. So this 1675 level is very key for me. If price bounces, no great surprise there. And potentially what I would even be looking for, if anyone's looking for an opportunity to invest in gold, to actually buy gold rather than short selling it, what do I need to see in order for that to become a reality? Well, I would need to see, preferably at one of these horizontal levels, but I would need to see a technical change in trend. I'm not interested in calling this. I'm not interested in calling this 1675 level as the low, and price is definitely going to go up from here. That's not the game that I'm in. I don't mind if I miss out a few pips at the bottom here and don't get in at the very low. What I'm concerned about is confirmation, because I want to take high probability opportunities. If I'm going to start buying up gold, I want there to be a high probability that is going to go up and go up soon. So what I would be looking for, I'd be looking for price to come down to one of these levels, form a low, see that level as support again, and then I would be looking for either a double bottom or a higher low around that level again, and then I would be looking for a break of the high. And that's the point then that I would start to look for my opportunity to buy. And again, I'm not talking about pressing buy when that high is broken. For me, my personal preference would be then to wait for a pullback and a retest of that, what some might call a neckline of the double bottom pattern. That's what I would be looking out for. That would be the opportunity that I would see as my point where I could then start to think about buying gold, trading long on gold, and buying it as an investment as well. Until that happens, then all I'm doing is looking for short opportunities at the moment. Guys, if you do have any questions as we're going through this, then please do let me know in the questions box. More than happy to answer questions for you if there are any markets that you want me to particularly look at. I'm going to try and get through all of the metals and energies markets this evening anyway, but do ask me if there's any burning questions that you have, and I'll try to get through as many questions as I can. So that's where I see gold, and I actually am pretty optimistic right now about potential short trading opportunities on gold. Basically, just since price has broken down past this 1750 level, I'll be waiting for today's candle to close, because of course if it closes back up above that level, then that won't be a true break, and therefore I will be a lot less bearish. But if price closes strongly below this level, then I will be interested in continuing to look for short opportunities on the lower time frames. And when I say closes below the level, I mean closes below on the daily time frame. So what I'm looking to avoid is some kind of reversal price action at this level. I need this close below, and then I need price to stay below this level, and then I'll be interested in continuing to trade that short. Moving on then, I'm going to move on to silver next. Now silver is pretty similar. This is the monthly time frame. So again, I've got these key monthly levels, this level of support from back in 2011, 12, thereabouts. We can see how price has actually seen that as a level of resistance. It's around $26 an ounce. That has been seen very recently as resistance. We've also got this level of support down here on the monthly time frame, which was resistance all the way back in 2008, 2007, 2008, 2010, support from 2013, 14, 15. So that's another key level, and price is actually approaching down to that level. The next key level is all the way down here at 14. So let's just zoom in a little bit. So price at the moment is in a downtrend. It's bearish on the monthly time frame, downtrend on weekly and daily time frames also. This level here, price is approaching, it's around 1850. I'm looking very keenly at this level. If price breaks down through that level, then I will remain bearish, probably all the way down to this 14 level down here. So let's look at that on the slightly lower time frames, weekly time frame up here, just to show that there is a lower high and lower low. The moving averages there are starting to point downwards, and they are just about in the correct order as well. The MACD is looking bearish, the RSI is looking bearish. So all of my indicators are suggesting here that momentum is to the downside, broken down through this key level. In fact, that happened a few weeks ago, just approaching 1850 down here. Now, price could see 1850 as support. In fact, I personally think that that's quite likely, that price will perhaps reach down to 1850 and see it as support. That doesn't necessarily mean that price is going to change trend and move upwards. What we've got here on silver is actually quite a lot less rangy currently. Price has ranged for quite some time in between this 26 and 22 levels, and it's also ranged significantly between 1850 and 14 for the previous all the way back here. Let's just have a look at those dates. So from basically from 2016 towards the end of 2016 all the way up to 2020 here, has been in this range between 14 and 1850. At the moment, price is heading down in between those two areas. So it's not in the 22 to 26 range, it's not in the 14 to 1850 range, it's in the middle of those. So it could bounce at 1850. It could then put in a lower high and perhaps make an attempt down below 1850. If that were to happen, then I would potentially be looking at short trading it all the way down to the 14 level. Now that's potentially a long way off. Remember, we're looking at the weekly time frame there. So in terms of what opportunities are right now, potentially, I'm looking for a pullback into the moving averages here, and then I'm looking for an opportunity to trade silver short. And again, as with gold, I'm not looking to buy silver until I see a technical evidence that the downtrend is over, because at the moment silver is in a downtrend and I'm only interested in selling it short. At some point, of course, that trend can change. It might start to range, or it might actually change trend. It could be at this 1850 level. Price reaches down here and then again gives me a double bottom at this level, then potentially there may be opportunities to trade to the upside. But until that happens, until I do see that double bottom and the break of the neckline and the higher high, I'm only interested in selling it short. So I'm actually interested in seeing potentially a bounce at 1850, a pullback, a short opportunity around here. I would then be looking for, I would need that opportunity to offer me a good enough reward to risk down to this level. So I need to have taken profit, or at least partial profits, by the time price reaches this level. So I'm at least in a break even, if not a profitable situation, before asking price to break through there. If price does break through there, then I would be looking for another pullback, and I would be looking to scale in to the position around this point here. So that's on a daily time frame. And as I said, I would be looking for price to make it down to this point here. It might not, in fact, it probably won't do it all in one go. And if it does it, I'm looking to be scaling it in at any opportunity that price gives me a pullback down to that level. I would certainly be taking profit at that 14 level. Not particularly interested in trading down past that level at the moment. The other alternative, of course, is to look on the lower time frames. I say alternative, it's the same opportunity really, but to look at it in terms of finding opportunities on those lower time frames. For example, the 4-hourly time frame right here, actually showing a strong trend to the downside in terms of price action, lower highs and lower lows. Those moving averages are all pointing downwards as well. The one thing that I would say on this particular time frame is that the MACD and the RSI are diverging. So while I've got lower lows in price action here, I actually have a high, well, pretty much the same, but just about higher low on the MACD, and I certainly have higher low on the RSI. That shows me that perhaps the momentum on this particular time frame is for now over, and this trend is not quite as healthy as it once was. Bearing in mind that this particular trend started here, and we've already had a couple of moves down on this time frame. So what I would actually prefer to do is wait for that pullback on the daily time frame before looking to get into this market. It doesn't necessarily mean that I'm not going to trade on the 4-hourly time frame, because price is moving, you know, quite quickly on silver at the moment, and I don't want to miss any opportunities. What I am likely to do if my momentum indicators are showing a potential slowdown in this trend, I'm more likely to enter this at a much reduced risk. So instead, you know, I mentioned earlier that perhaps risking 1% on a trade, I would be risking maybe 0.5 or 0.25%, looking to trade down to this 1850 level, and I would be looking to take profits sooner because my momentum indicators are indicating potentially that this trend is not going to run for much longer on this time frame. I would then go up, or if price is actually you know, going to do something like this and then start to come up here, I would simply go back up to my daily time frame and look for the entry there. Doesn't mean I'm going to start trading long on the 4-hourly time frame, because as I said, my my main priority is to trade with the daily trend. Let's just have a look at the questions. Okay, so to summarize on silver then, my main direction I get from the daily time frame. The daily time frame is in a downtrend. It's overextended currently from the moving averages, so I'm not looking to sell right now. On the daily time frame, I would be looking for a pullback. That pullback could start from here, or price could make it down to 1850 and then pull back. But either way, I'm looking and waiting for that pullback before I look for my short opportunity. Once that pullback has happened, I'll be looking around the area of the 10 and 20 moving averages for bearish price action, bearish candlestick price action. So let me try and demonstrate that by finding a previous opportunity. So bearish price action, let's have a look at what I would be specifically looking for. I'd be specifically looking for something like this. A candle that has decisively closed in the bottom portion of the candle. So this candle has tested. Up here is the buyers have pushed the price up, but the sellers have taken over and it's decisively closed down at the bottom of the candle. This one here, this is a bearish engulfing candle. This one here, bearish engulfing. Bearish engulfing, for those that don't know, is where price has it's a 2-bar pattern where the first bar is smaller than the second, and the second candle closes below the lowest point of the first candle. So it's an extreme shift in momentum from buyers to sellers. So any one of those opportunities, that's the kind of price action I would be looking out for over here once I have seen my pullback into the moving averages. That's the kind of price action I'd be looking out for in order to indicate the pullback, that the buyers have done their thing, and it's the sellers that are now taking over, and that's when I want to get into the market short. So hopefully that summarizes for you, and it's not too confusing. I then simply would go down to lower timeframes to find potentially better reward to risk opportunities, or I can't guarantee that price is going to pull back on the daily time frame into the moving averages, and that's a time where I would go to a lower time frame, for example the 4-hourly, in order to find a bearish opportunity here. And in fact, these are also bearish candles within this area between the 10 and 20 moving averages, so perfectly valid entry opportunities there. We'll just reduce the risk down because of the divergence I see on the MACD. So that's silver. I'm going to move on now to the energies, and I'm going to look at the oils. So I've got Brent crude and West Texas. We'll look at West Texas first. And what is happening in the oil market? Well, this has been directly impacted by world events. Not saying that gold hasn't. Of course, gold has been directly impacted by world events, and rightly so, because investors do see gold as a kind of safe haven currency. So, you know, when the markets are in turmoil and there are adverse or you know, tragic world events, whether that is the outbreak of war, whether that is some kind of natural disaster, the markets, you know, when they're risk off, if you like, people look to take their investments out of the stock markets, which can be more risky at that time, and into the safe haven, so things like gold. But onto oil, I mean, the price of oil at the moment is very, very influenced by the war between Russia and Ukraine, unfortunately, and so we've seen a massive spike in price all the way up to this around the 126 level, this level of resistance up here. We've got another level of resistance around the 115 mark. If I just show you on the monthly time frame, so we can actually see these very, very long standing levels. So this 126 level was a level from all the way back in, I think, 2011 and 2012 resistance here, and also a solid level of resistance here all the way through 2013, 2014. So those two levels have come into play again. The next level of support beneath price, in fact, where price is currently finding support at the 100 level. Now that $100 barrel is obviously a very significant psychological level, as well as a technical level here. And then these lows just down here around 95.50, also significant. So that's where we are on the monthly time frame with those levels. In terms of trading opportunities, at the moment, currently, price is actually within a range on WTI. It's hit these highs at 126. It's bounced down from there. It's attempted at up and actually failed to get that high again and bounced down again. And if we look also at the RSI and the MACD is flat. RSI is bearish. So while we see this lower high in price action on the weekly time frame, we also see agreement. So we see agreement of the MACD and the RSI, indicating that this is no longer in an uptrend. The momentum is no longer to the upside. Having said that, the momentum to the downside is not there yet either. If we just look at the daily time frame, we can see where price kind of currently is trapped in between this pretty solid level of support at 95.50. It's actually just bounced around this area, around the $100 a barrel area. Now, while price is in this area, it's unlikely that I'm going to find a really good trade from here. The reason is that currently there's a downtrend on the daily time frame. I've got lower highs and lower lows here, but this level is too strong. This horizontal level of support is too strong for me to want to trade down through because the likelihood is that price could bounce at this level. The likelihood now, in my mind, is that price might range somewhere around here for a period of time. And if that's to be the case, perhaps price could come up. It could even put a higher low and a higher high. But then I've got this strong level around 115. So any long trades are potentially short-lived and certainly not necessarily particularly high reward to risk opportunities. Now that doesn't mean to say that there won't be opportunities on the intraday timeframes. I would need to see, in order to trade long on this, I would need to see a change in trend on the daily, and then I would need to go down to the intraday timeframes to see if I can find a trading opportunity that I can enter and take profit on before this 115 level. Obviously, if price breaks above 115, then I will be for sure bullish on this market and looking for long opportunities. But for the foreseeable future, I see price most likely to range in this area. Now, if we get another lower high at this point and price comes down and breaks down through this significant level at 95.50, then I will be bearish. Then I will be strongly looking for short opportunities. Now, because price is actually in a downtrend already on this daily time frame, I've got lower highs and lower lows. Price is in a downtrend. So my bias is bearish, and if I were to find a short entry on a lower time frame, it's unlikely it'll happen for me on the daily time frame because I don't see a good enough reward to risk. If I were to enter a trade around here looking to trade short, I've got the massive psychological $100 a barrel level, and below that I've got strong support here at 95.50. So it's unlikely I'll be trading this short on the daily time frame in the near future. But if I were to see a potential short entry on, for example, the 4-hour time frame, which could in fact happen here. I've got price just about around the 20 moving average there. It's coinciding with this previous low level here, and I would just have to wait for my bearish candle. Price action doesn't look great in all honesty on that particular time frame, but you know, perhaps it's going to move back down. If it gets down back below this $100 a barrel level, then perhaps there might be a short trade there. There might be an opportunity to trade down and take profit before 95.50, so that if price does break through 95.50, I've at least taken some money off the table, and then I'm only leaving a reduced portion of the trade on, just in case price does bounce here. But if it does break through, that could potentially be a strong breakthrough, in which case I would want to be very ready for that. But to simplify things, going back to the daily time frame, what I would be really keen to look out for would be break through this 95.50 level, a pullback, and then around this area here, look for my bearish price action, my bearish candlestick, in order to indicate that the sellers are back in this market. At the moment, the MACD and the RSI both still look bearish. So momentum is to the downside. I would love to take advantage of that. But these levels here, the 100 and the 95.50, are the levels that I need to be very cautious of. If price gets beneath there, then I see potential for price to get all the way down to 85, which is the next strong level of potential support. It's been resistance all the way back here. Let's just get rid of that and move on to Brent. It's fairly similar on Brent. There's slightly different levels, but pretty similar. We can see that price recently has reacted against what was already a solid level of resistance from back here again in 2011 and 2012. There's another solid level of resistance around this 115 mark, and solid support, which has been resistance around this $86 level. So those are my monthly levels, which give me a roadmap. I'm also looking at the $100 a barrel level. It's a strong psychological level. We can see how price back in 2011, 2012, 13, all the way through here, that $100 a barrel, once price did make it above there, it acted as strong support. And I would anticipate that that would act as strong support again. You know, something pretty significant has to happen in order for price to break down below that $100 a barrel level once it has made its way all the way up there. So looking at the weekly time frame here, you can see that the price action, we've got lower high here. Price action is currently looking bearish, but we can see this strong support at 100. So again, I think it's unlikely, and I would say even less likely, that I'm going to find a trade in, because I think the likelihood is that price is going to range perhaps between 100 and 115 around this area. If price does break below $100 a barrel, then I will be all guns blazing, looking out for potential short opportunities here. If that does happen, I would be looking for those opportunities. The minute price gets beneath $100 a barrel, I'm then looking on the lower time frames for potential opportunities to get in, because it could, you know, if it's a major event or situation that has caused price to break down below $100 a barrel, it could move very quickly. It might even be that the 15-minute time frame could be something to look out for, looking at short opportunities. But ideally, what I would be looking for would be, I would be looking for price to close below $100 a barrel before I really start trading short on that. And in a perfect world, I would be looking for the daily time frame to trade below 100, come back, retest it, and then give me my bearish price action around here in order to then trade that short, potentially down to 86, which could on a daily time frame be a nice 3-to-1 reward to risk opportunity. I would also be looking out on the lower time frame, so 4-hourly, for example, or even hourly time frame, looking for higher reward to risk opportunities along the way. So that's fairly similar to WTI. I'd say in the shorter term, I'm more likely to trade WTI because it is already kind of pushing below 100. It looks like potentially it could be more likely to break below that level than the Brent, and there's a little bit more in it potentially, where I can see the lower highs and lower lows here, an area for price to pull back to, and then potentially a reasonable reward to risk trade back down to that level. Moving on then to another metal that we have here. This is, let's just get the weekly time frame up here. So palladium, this is something that, again, when it trends, it can trend really, really nicely. Back in 2018, 2019, all the way up to 2020, it was trending really, really nicely. It's we can see here on the weekly time frame, this is major divergence here. I've got a higher high in price, and on my MACD and my RSI, I've got lower highs. That's major bearish divergence. So since then, price has really again been ranging between this 1815 level and the 2450 level up here. So again, the 1815 level here, if price were to break below that level, then I would be strongly bearish on this market. Right now, it looks like that level is being seen as support, as it has done very significantly in the past. And when that has happened in the past here, it has actually eventually resulted in, this is a consolidation here with similar lows and lower highs. So the buyers are holding up the market at this point. The sellers are running out of steam. And at some point, price breaks out. When that happens, there's actually been a really nice opportunity to take advantage of the renewed uptrend there. Hasn't lasted forever, but that's what I'm looking at potentially here. So again, I've got lower highs here. I've currently got lower lows, but just recently I've started to see price making higher lows here. Certainly, again, I have got this time bullish divergence. I've got lower lows in price action, higher lows in the MACD. The RSI has been fairly flat here, but it's certainly looking bullish right now. So that suggests that this move to the downside has run out of steam potentially, and perhaps getting ready to turn around for a medium-term change of trend. So what I need to see is I need to see I mean, it is currently setting up reasonably well for a move to the upside. It's not particularly clean down here. So what I would actually like to see, this is my move to the upside currently. I would like to see another push down and a higher low, a solid higher low at this point. So here's my low here. I'd like to see a solid higher low at this point. And then wherever that high is formed here, that would be the level that I would be looking at to break in order to potentially get into the market. So I would be looking for a higher low here. I would then be looking for a break of this level, and then I'd be looking for a pullback on any time frame, daily time frame, 4 hourly, any time frame here. I'd be looking for a pullback, and then in this area here, I would be looking for a long opportunity. Now, what that does is it also gives me time for these moving averages to cross over into the correct order, so that I have those pointing in the direction of my trade, in the direction of the trend. So I'm not looking at being impatient here. I'm looking at being pretty patient. Again, this might not happen if price breaks below this level here, then I'll be looking for a pullback and a move to the downside. But if price does hold at this level, I'm looking for a higher low, I'm looking for a break of the high, and then I'm looking for a pullback in order to trade long, and I'd be heading up to around this level here. So palladium is something that I have actually I have actually very heavily traded, because when it trends, it tends to trend quite nicely. When it ranges, I completely stay away. So in this time here, I wasn't trading it at all. But it's really important when any asset is ranging, it's really important not to completely disregard that. It's really important before you move on to the next chart to work out, what do I need to see in order to trade this again? Because those can tend to be the best trades if you're prepared. If you're looking for a market that's consolidating, then at some point that consolidation is going to end. And when that consolidation does end, it can be a strong breakout. And that can be, the difference between a profitable month and a non-profitable month is being prepared for that breakout. So that's what I'm doing right now on palladium. The current trend on the daily time frame. So if we look now, the question in the box, why would I not trade this long now on a lower time frame? Well, we can see the beginnings of an uptrend on the 4-hourly time frame here. It's very, very messy, but yes, we can see higher lows and higher highs. But I just go back to my, it's a rule that I have with myself that I rarely break. I trade in the direction of the daily trend. At the very least, if the weekly and monthly are trending in that direction, then fantastic. But at the very least, I need the daily trend to be in the, I need to be trading in that direction. And currently, the daily trend is not up. So I'm not particularly interested in trading long on the 4-hourly time frame. Once the daily trend is up, once I see what I pointed out, so once I see the clear higher low, this is still a move to the downside here, and it's just potentially coming to an end, but I don't see a change in trend yet. Once I do see that clear higher low, higher high, then I will for sure be going down to the lower time frames in order to trade long. But right now, I'm not looking at jumping the gun. I'm not looking to try and get in, because my priority is to find the highest probability opportunities. It's not about being clever or being right. It's just about taking the highest probability opportunities. So I do need to wait for that to happen, really. So that brings us to the end of the market analysis. Let me just take you back to the PowerPoint presentation very, very briefly for a little bit of information about IC markets. Just the contact details there. If you do have any questions, you can learn more about their services. They have the usual socials, Twitter, Instagram, Facebook. They've got a fantastic customer service team, so do get in touch. There's an email address there and a phone number there that you can phone. If you've got any questions, any suggestions for further webinars that you'd like to hear more of, then please do get in touch with them. So it has been my pleasure this evening. I hope you found it useful and hope it's given you some ideas for potential trading in the coming days and weeks. And I do hope that I will speak to some of you in the not too distant future. Cheers, everyone.